What's up?
Ty Crandall here with Credit Suite, and welcome to our live stream today. We're in the middle. We've now surpassed the middle of January 2017. Hope your new year's getting off to a great start. If it's not, then one thing that can help it get off to a great start is money. And that's what we're going to be talking about today. So today's Periscope, we're going to be talking about money, how to get money for your business. We're going to be talking more about our 3 C's of lending formula. Hey, welcome, Prince. Thanks for coming. We're going to be diving more into this 3 C's of lending formula. We have talked about the 3 C's, how you can get money based on the strengths of your business. Hey, what's up? Welcome. Leonard, everybody's coming in. Cool. Welcome. Thanks for the hearts. Thanks for the loves. Thanks for the shares. It's awesome that you guys do that. So we've been talking about how to get money for a business. Basically, when you can't get money in a bank. We started weeks ago talking about how difficult it is to get money at a bank. We looked at SBA's guidelines. We dissected them. We broke them down. And we came to the conclusion that it's really tough unless you're a very well-established business to be able to get a bank loan. Okay? So then we jumped in and we talked about an alternative way to get a bank loan, which is called the 3 C's of lending formula. What's up? Thanks. Thank you. You made it a great webinar yesterday. Hey, I didn't hear back. I hope you got my email today thanking you for the webinar, Christine. It was awesome. Guys, if anybody missed that webinar yesterday, make sure you email us, info@creditsuite.com. It was ridiculously awesome. Christine was on. She mapped out exactly how she got $158,000 in business credit in 90 days. We went through her reports. We looked at approvals. She walked us through the whole process. We went through step by step. It's available on YouTube right now. As a matter of fact, if you go to YouTube and type in business credit in the search, it's the #1 result that will come up. There's usually 2 ads above it that say ads, and then we're right there. Christine, we're already #1 on YouTube. There's like 400 or 500 different views on that already. So check it out, okay? I agree. Cool. Hope you loved it. We got a lot of positive feedback, and it really maps out how she got about $158,000 in business credit. So that'll help you. If you didn't see the webinar, email us info@creditsuite.com. That's CreditSuite, SUITE.com. And once you do that, we will email you a playback of that webinar in case you happen to miss it, which is pretty cool. You rock. Thanks for coming. So we are now off business credit. We're talking about business loans. And in talking about business loans, we're talking about how you get money when you can't get money at a bank. Because remember, banks are only going to help you if you have really good personal credit, good business credit, good bank credit, which means you have money in the bank, a lot of it. And they're also going to help you if you have collateral and you have cash flow and tax returns that show a profit and blah, blah, blah. It's tough to get approved for money at a bank. But now alternative lenders are about 98% of loans that are taking place right now. And that's great news for us because alternative lenders are much easier to qualify for because instead of looking at your whole business, I don't like having my white t-shirt, which is why I'm always doing this, like pulling this down and trying to get that hidden. It doesn't work. So cash flow financing and credit-based financing, this stuff is much easier to qualify for because it's only based on one strength. So for example, a couple of weeks ago, we talked about cash flow-based financing just to bring you up to speed while some others are maybe not pouring, but maybe coming into the room is more accurate. And we talked about how you can get money just based on your revenue if you have $10,000 a month in deposits in 1 year in business. Remember, that's a great, easy way to get money. Fast and easy. We just got somebody approved for $120,000. He's getting ready to sign, and he'll fund the next day. Pretty cool to get $120,000 in your bank account in a day's time, and then all you have to have qualifies 1 year in business in 10 months, or $10K in monthly deposits. And we also talked about private money and SBA loans if you do have good personal credit tax returns. Guys, tomorrow, a guy is getting money deposited in his bank account that's a client of ours. It's $23 million is what he's getting deposited because he has really good financials and really good credit. He's got a good sized business. So that type of money is available through private money at Alternative SBA. Even if you want $50,000, you can get it if you do have good credit and tax returns. And speaking of good credit, the second C of lending, right? 3 C's of lending: cash flow, credit, and collateral. The second C is if you do have good personal credit. We talked more about this last week. You can get up to $150,000 in 0% financing. And we've talked about a lot of details on these. I just want to bring everybody up to speed. Wait, what does he mean? Well, there's 3 C's. C's. The first is cash flow. The second is credit. The third we're talking about is collateral. So there you go. There's a quick overview. Cash flow, credit, and collateral. You need one for business loan. One. Only one. If you have cash flow of 10 grand a month or more in a year's worth in business, you can get 10% of whatever your annual revenue deposited like in 24, 72 hours. If you have good personal credit, you can get 0% rate unsecured financing. Even as a startup, you don't need collateral or cash flow to qualify. So even as a startup, you can get 150 G's. And if you don't have good personal credit, well, then bring in a guarantor that does and get approved that way. So that gives you a few different options. Today, we're talking about the third C of lending. It's called collateral. And collateral is awesome because if you have some type of viable collateral, you don't need cash flow and you don't need good credit. So that means I'm going to show you today how to get interest rates of 1 to 5% on these type of loans. They will not verify your cash flow. They do not care about your credit. So even if you have horrible personal credit, you can get most of what we're going to talk about today. And even if you don't have any cash flow, even as a startup, you can get approved for most of what we talk about today. And don't forget that some of this collateral, like 401k or stocks, it doesn't matter if you have it. Maybe somebody wants to invest in your business. Maybe it's a family member. Maybe it's a friend. Maybe it's just somebody that wants a piece of the pie and wants the equity from your idea. Wait, what's up with that debit score? I'm not sure I understand your question. So what's up with the debit score? I didn't understand your question, so ask me again and clarify, and I'll get you an answer. So with this, you don't need cash flow, you don't need good credit, you can get approved regardless of collateral or cash flow, which means you can get it as a startup because cash flow doesn't matter. You can get it without tax returns because cash flow doesn't matter. How you manage your bank account doesn't matter. Your personal credit doesn't matter in most cases. You're still able to get most of the financing we're talking about. So there's a credit score. So isn't there a debit score? I don't know. I've never heard of a debit score. I'm not sure what you're talking about. There's really three different kinds of credit scores. There's personal credit scores, there's business credit scores, and there's bank credit scores, which has to do with how much money you keep in your bank account. But those are the three types of credit there truly are. I don't know anything about what you're asking about a debit. I think you're talking about the bank credit score. And you know what? I'm going to do a scope possibly in a week or two and break down the bank credit score. I'll give you an idea of how that works because you can't find information out there about it. You'll never know what your bank credit score is because banks won't release it. It's hidden, it's secret, but it determines if you get a bank loan. So that's probably worth us diving into. I'll throw that on the whiteboard and we'll jump into that in a week or two at most probably. All right, so if there's a C, what do the B and B mean? Now you're confusing me. I am confused completely of what you're talking about. So let me try to simplify. Guys, there's 3 C's of lending. This is what I call this formula. There's 3 ways you can get business loans. It's either based on your cash flow, or it's based on your credit, your personal credit, which is the second C, right, too. Then the third C, if we look at the 3 C's, the third C is collateral. So again, I'm not sure what you're asking about with the B's, but there are 3 C's of lending. I thought there were B and C. Nope, there's no B's. This is what it is. 3 C's of lending, the 3 C's cash flow, credit, A. So we'll probably do that maybe next week or maybe the week after. Okay, so collateral is all based on, do you have some viable kind of collateral? Remember, you may not, but maybe an investor wants to have a 401k or stock. So some of this may work for investors as well, and we will. I'll map out how the bank credit works in a week or two. So your investors might have collateral. So even if you say, I have none of this, pay attention. Because the reality is that you might have people that want to invest in your business that do have some of this collateral that they let you use as leverage to get a loan to build the business. So remember, even if you don't have cash flow, you don't have credit, you don't have collateral, you can still get business credit, but you also might be able to get somebody else that has good personal credit or collateral that can help you. On a scale of 1 to 10, what's your favorite C in the 3 C's? I don't have one. It really comes down to what you're looking for. Cash flow is awesome because it's fast, easy money, and credit doesn't matter. If you have good credit, I without a doubt would go with the unsecured financing because it's 0% rates. I think it's awesome. And collateral-based financing is the best long-term rates you're going to get. So personally, if it was me, what I would do is I would come in and I would actually look at this and see which you qualify for. And some people will qualify for a lot of different ones, cash flow credit and collateral. And if you do, then I would take all of it. That's just my opinion. So on collateral-based financing, let's dive in. 15 different types of collateral today and how you can qualify for a business loan. So the first thing we're talking about here is 401k or an IRA or stocks or bonds. So if you have a 401k, IRA, or stocks or bonds, you can borrow 90% of what's in stocks and bonds and 100% of what's in a 401k or IRA. You could borrow against what you have in stocks and bonds, get 90% or 100% of what's in a 401k or IRA. Now, what I like about this is that you can get a 5% rate. It's a 5% loan, okay? So that being said, you also get prime plus 2%. So it's very low rates on some of the other ones that aren't 5%. It's typically 5%, and sometimes on the stocks and bonds, they'll just charge 2% plus prime. But 5% is very common on the 401k. Again, you can get 100% of what's in a 401k or 90% of stocks. Now, okay, so that being said, 401k, IRA, stocks, bonds is awesome for a few different reasons. First of all, you can use an investor that has a 401k, stocks, bonds, or IRA, use theirs as collateral to get funding for your business, which is perfect. So maybe you have a really good idea. Maybe you have somebody around you that has that kind of asset that believes in what you're doing. Maybe you want to pay them something monthly from the business, give them a percentage of ownership in the business in exchange for letting them use your their 401k or IRA. Maybe you have a 401k or IRA. You can't beat a 5% interest rate on a long-term loan, and credit lines are available as well, okay? So here's the thing, only if you default. Somebody says, look, isn't that putting it in jeopardy? That's the benefit of this. Collateral-based financing is where you're pledging collateral to the lender in case you default. The good thing is that your rates are super low, lower than you'll ever get on any kind of financing, 1, 2, 3, 4, 5%. The bad thing is if you default, they'll take your 401k, they'll take your stocks. But that's the good part, is that there's leverage there, there's collateral, there's assets they can take if you default, so the lender's risk is lower, and because their risk is lower, you get better rates. So look, somebody said, look, isn't that putting it in jeopardy? Are you going to default? If you think you may default and not pay your payments, then never put that in jeopardy. But here's the best part. You're still earning interest. You're still keeping your stocks invested. You're still keeping your 401k invested. There's a lot of different lenders that do security-based financing and 401k financing, depending on the specifics. And we don't usually talk about lenders because there's a lot of them. For example, when we talk about cash flow-based financing, there's well over 1,000 different lenders out there, including places like On Deck. Okay, so there's all different ones depending on how much of your 401k do you have vested. Are you looking for securities? Do you have IRAs, stocks, bonds? Or do you have a 401k? So there's different lenders for each one of these scenarios. There's lenders if you have a 401k versus an IRA versus stocks or bonds. There's lenders depending on how you actually have it vested or how much you have vested. How regulated are these lenders? Well, all lenders are regulated, okay? But it just depends. The commercial space, they're not as regulated as in the consumer space. And obviously, anyone that is government-backed is also, more regulated than somebody that's not government backed or government insured, I should say. So 401k, IRA, stocks or bonds, you only put them in jeopardy in case you default. If you default, they will take them. But because you've got collateral you're pledging, your risk is much lower. You could typically get very, 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 very low interest rates. Sell your product or service on cash only to build the rest, and that's advice from all of you from somebody here. So thank you very much for the loves, and thank you for the shares. So you still earn interest on the stocks. You're still have them invested in the same companies. You're still earning a return, but the benefit is you use it as leverage, and then that way you can get business financing, and there's no penalties. So the 401k financing is done in a way where there's absolutely no penalties. So there's no penalty for using your 401k or stock as collateral. You can still earn the interest and returns, and you can get 5% financing with very low rates. So we have one of these right now that's closing next week, I think. And the guy got like a ton of money, $250,000 that he got. And that's what's good. We've seen one with $750,000 somebody uses kind of financing for. And that's what's awesome is that this guy that got $750,000 couldn't even get a $25,000 loan from his bank and used this to get a $750,000 access, which by the way, he didn't get the $750,000. It was way more than he wanted or needed. He got less than that, but he would have qualified up to $750,000. So great program if you or somebody else that wants to invest in your business has a 401k, IRA, stocks, bonds. Well, that wouldn't work. It depends on how much money you have in there. In order to qualify for this program, I think you need $5,000 in your in your 401k. If you don't have that yet, this program won't work for you, and that's okay. Some potential investors, it might work, but it probably won't. So let's take a look at. So we just talked about how to use 401k, IRA, stocks, bonds to get financing and get 90 to 100% against those. So if you have $100,000 in a 401k and 100% of it's rollable, not with the current employer, you could get a full $100,000. Another kind of financing is called account receivable financing, and you can get 80% of what you actually have in receivables. Now this has very low rates as well, 1.25% to 3% discount rate, some of the lowest rates you're going to find on any kind of financing. You can get immediate financing on 80% of your receivables, and you can get loans up to $20 million as long as you have receivables with a business or the government. So let me give you an example of how this. Let's say you are a commercial lawn care business and you take care of lawns for buildings. Let's say you have a big factory and you have a big order come in. Account receivable, let's say you're a doctor's office. Let's say you're a plumber that deals with and helps home builders do the plumbing for the homes. In these cases, you might produce your services or product and then have to wait days, weeks, or months to get paid. With account receivable financing, you can get paid 80% of what you're owed in the next day in 24 hours. Don't have to wait weeks, days, or months to get paid. And then the difference between what you got and and minus the lender's fee, you actually, I messed that whole thing up, so let me try this. So yes, account receivable financing is also called factoring. So let's say you have $100,000 in receivables with a company. You usually would wait 2 months to get paid. With AR financing, they give you 80% of that money the next day. 80 grand is in your pocket. Then the lender collects the whole amount from the actual source that the account receivable is with. When they get paid that invoice, they give you the other 20% minus their fee. So in this example, you got $100,000. You normally wait 2 months to get paid. You deliver the product. The company says, okay, we're going to pay you in 2 months. The lender says, here's 80,000 of that 100,000. You're going to get it tomorrow. The other 20,000 we're going to give you once we collect the invoice. They collect the invoice minus their fee, which again is 1.25% to 3%. Great if you have account receivables or outstanding receivables with another business or with the government. And the product has to do with purchase order financing. You can get 95% of what you have in a purchase order, and you can get 1 to 4% rates and get basically I just helped a guy right now in the United States. He's got purchase orders in another country, and we're helping him get PO financing. So here's the deal. He has an order and he needs to get supplies to fill his order. The problem is he doesn't have the money to buy the supplies. Thank you so much, whoever's going crazy on the love button. That's awesome. Thank you. He doesn't have the money to buy the supplies he needs to fulfill the order. So he's coming to us. We're going to get him 95% of the money he needs to buy the supplies. Then he can fulfill his order and get paid on the order and pay back the financing. That's called account receivable financing. Okay, and I always use the same example. Let's say you have you are an embroiderer that embroiders t-shirts. Let's say you get a huge order. Let's say Busch Gardens comes to you and says they want you to do all their t-shirts. Well, you got to buy all the shirts before you embroider them, and you don't have the money to buy the shirts from your supplier. Well, then what you do is get purchase order financing. The lender gives a letter of credit to your supplier. The supplier ships the shirts. They are paid the actual money. Okay, then you embroider the shirts and then you get paid on that actual deal. That's called purchase order financing. Works fantastic if you need something from suppliers and you don't have or don't want to use the cash flow to actually get the purchase orders or to actually buy what you need from those suppliers. Great option. Financing here that's a line of credit. Doesn't matter what your personal credit is. And somebody says, well, what's the risk? Well, again, the risk is, and I'm not exactly sure I understand what your question is, but again, the account receivables, they're very good because what's happening with both AR and PO is the lender is very good at collecting on the money. So if they default, if the actual person ever defaults, it's the lender that's going to collect from the actual source on AR and PO. So your risk is really minimal. The lender is the one that's going to be pursuing those companies for money if they default. So if you have inventory worth a lot of money, let's say you have inventory worth about $500,000, then if that's the case, you can get 50% line of credit against the actual inventory you have. So you can get about $250,000 to $500,000, okay, in a loan, 2% interest rates plus, and it's a line of credit. This is when you can really get a line of credit regardless of how bad your personal credit is. But you have to have a lot of inventory. You get about 50% of the value of that inventory. Let's say you have a clothing store. Let's say you have a manufacturing company and you have a bunch of inventory on the shelves worth $500,000. Well, you can get a line of credit for $250,000 using that inventory as collateral, and your cash flow and credit doesn't matter. It's one of the only kind of financing you can get where your cash flow and credit doesn't matter, and you can still get a line of credit. So a trucking company, it depends on what kind of inventory you have. What kind of inventory do you have on the shelves? That's what matters. You've got to have actual inventory. Vehicles, for example, like trucks, wouldn't work as inventory, but we do offer, and there is possible to get financing on trucks. Borrow against trucks you already have, or get the money you're looking. More about this kind of financing, then go to creditsuite.com/get funding or creditsuite.com/consult. We'll meet with you. We'll talk more on get funding. You can even go through and get a pre-approval. So another kind of financing we're talking about is equipment financing, and you can usually get a value about 50% of the equipment you own you can borrow against, and I'm going to tell you a little bit more about that in a second. You can get up to $20 million in loan. Long-term loans, 12 to 48 months. You got to have only a 580 credit score or higher to qualify. Okay, rates are all over the board, about 5 to 55%, but you can get it even as a startup, okay, and you can buy equipment, lease equipment, or borrow against equipment you already have. 3 different kinds of loans I'm talking about here. If you had it and been in business a year, you can get equipment leasing. You could lease equipment for very low rates. You could also buy equipment even as a startup buy equipment even as a startup. But again, if you're a startup, they want a little bit better credit. If you're not a startup, you can go as low as a 580 credit score. Or you can borrow against equipment you already own. So let's say you own a big backhoe. You could use that as collateral, borrow against that backhoe, and get 50% financing against what the value of that backhoe is. If the backhoe is worth $100,000, they give you a loan for $50,000. They call that equipment sale leaseback because ultimately you're selling the equipment to the lender, they're leasing it back to you. 3 good options: buy equipment, even as a startup; lease equipment, been in business a year, a little bit better credit, get better rates and terms; or you can borrow against equipment that you already own. Guys, remember, almost all different types of business financing, you can write off the interest at the end of the year. So you get affordable payments, and a lot of this works even with bad credit. So you get the financing that you need, you write off the interest that you pay, and again, you're able to use your collateral to qualify, which makes a lot of sense. Now, I've helped a few of my friends, for example, get unsecured financing. They had good credit. We got them unsecured financing. Then we got them equipment financing to buy the equipment they needed. The unsecured they used to pay payroll. Thank you guys for the love. I appreciate that. And then what they did beyond that is they then used the unsecured money to pay the payroll, the other stuff that they need, and then they actually came in from that point and then got equipment financing and used the unsecured credit cards to pay their down payment on the equipment financing, because you typically need to pay the first and last month's payment with equipment financing. So equipment financing, equipment leasing, equipment sale leaseback is definitely a great way to go here. Let me get this. I got a message. So let me talk to you a little bit more about some more. We're talking about commercial real estate financing. Product. To buy commercial real estate or borrow against it, let us know. We deal with all kinds of lenders on the low side, on the high side. We're doing a $2 million commercial real estate loan right now. We do them on the low side as well. So we'll help you buy commercial real estate or borrow against it. We have non-conventional programs through non-conventional banks, and we also deal with conventional banks with SBA's 504 program. With SBA's 504 program, you can get financing SBA back to get equipment, and if you don't don't qualify, no big deal. We deal with a lot of alternative lenders that'll help you there as well. Financing is business financing. Okay, and thank you guys for the love. Thank you for the hearts. Thank you for the shares. I think it's awesome that you're doing that. Book of business financing, 120% of the surrender value of your book of business. Do you learn all this in college? You learned all this from experience in business. That's a great question. Let me none of this from college. I learned a lot in college, but I didn't learn any of this. This is all hard knocks experience. I've been in finance for about 17 years myself. I've owned a consumer credit company that I've sold. I've owned a mortgage company. I've been in business credit financing for going on 7 years now. So we deal with a lot of different financial products, a lot of different financial instruments and credit. And all of this is just real world experience that you're getting here. They don't teach you a lot of this in college. Does that include multifamily home purchases? Yes, 4 or 5 units or more. The norm is 5 units. There are some sources that will even do 4 units with some commercial financing, but the norm is actually 5 units for commercial. You can, with book of business financing, you have to be an insurance agent, but if you are an insurance agent and you have a book of business, you can go and borrow as much as what's called 120% of your surrender value, or what the wholesale value of your book of business is. It only works for insurance agents, but you can get really long loan terms, 3 to 10 year loan terms, and 4 to 9% plus interest rate. Only, but let's say you want to buy an insurance agency. You could use that kind of financing, use their existing book of business to get collateral to buy the insurance agent. Pretty cool. So any insurance agents you know, or any insurance agents that are on this or watching this afterwards, that's a great product as well. Some other stuff I didn't list here on the board is house reseller program. You can get up to 100% of the actual money you need to buy a home and flip it. In order to do it, you have to have some experience in flipping homes. Do 2 or 3 of them recently. You have to have money in the bank. You have to have average credit at 650 or higher. If you do, you can qualify. Another kind of financing is commercial vehicle financing. Tow trucks, 18-wheeler big rigs. There's financing where you can borrow against the ones you have or get the money you need to buy those with mid-600 scores as well. I didn't put either one of those on the board. So those are a lot of different financing options that we just talked about. All of these have the lowest interest rates you're ever going to pay, about 5% or less in a lot of different cases. A lot of them work regardless of personal credit. Very few of them look at your cash flow. So even if your cash flow is bad, your credit's bad, you can still get a lot of the kind of financing that we just talked about. So we do help real estate as well. Yes, we do. We don't really deal with residential real estate, but commercial real estate, yes. Lost my connect. Multifamily home financing, yes, it should be 5 units or more. We have some sources that will go with 4 units or more. If it's 1, 2, 3 units, or even 4 units in a lot of cases, it qualifies for residential financing, not commercial financing. But if it's financing of 5 units or more, a multifamily of 5 units or more, then you can get financing. You can borrow against that. You can get the money that you're looking for to buy that. So a lot of different kind of talked about how to use 401ks, IRAs, and if you said I'll contact you, great. There's 2 options here. CreditSuite.com/get funding to get it approved, get your application in. CreditSuite.com/consult to talk a little bit more about us, get details. So you can use 401k, IRA, stocks, or bonds from you or somebody else to get 90 to 100% financing against the value. If you have account receivables with another business, you can get 80% advanced to you right away. The rest will come when the receivables are paid. You can get the money you need to fulfill supplier orders with purchase order financing. You get 95% of the purchase order that you're actually trying to fulfill. You can get a real line of credit with inventory financing for $250,000, even $500,000. And credit doesn't matter. One of the only kind of financing you can get where credit doesn't matter. You can get the money you need to fulfill supplier orders with purchase order financing. You get 95% of the purchase order that you're actually trying to fulfill. You can get a real line of credit with inventory financing for $250,000, even $500,000. And credit doesn't matter. One of the only kind of financing you can get where credit doesn't matter. You can get equipment financing to buy equipment, lease equipment, or borrow against equipment you already have. You can get financing to buy or borrow against commercial real estate. If you're an insurance agent, you can get book of business financing. Book a business as, and remember, you can also get house reseller program. You can get financing to buy commercial vehicles, borrow against all of those as well. So that being said, we talked about, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15 different kinds of financing today that you can get. And that really concludes our 3 C's of lending. Do you have cash flow over 10 grand a month? If yes, you could probably qualify for a business loan. Do you have a good credit of 700 or more, or know a guarantor that does? If yes, you could probably get a business loan up to 150 grand at 0%. Do you or know somebody else that has some kind of collateral like 401k, IRA, stocks, or bonds? If so, you can get 90 to 100% financing against that. Or maybe you have account receivables, purchase orders, inventory, equipment, commercial real estate. Maybe you're a house flipper. Maybe you have commercial vehicles, book a business. Any of those type of things will get you financing. If you have a C, you could typically qualify for a business loan. If you don't have a C, well then that's when you want to go back to our other scopes and keep subscribed, because then what you need is business credit. Business credit works for you even if you don't have cash flow credit or collateral. As a matter of fact, if you don't have one of these, you're not lendable. No bank's going to give you money for your business. But you can get tons of business credit. How much? Well, again, here's some of the running totals that we've seen so far here with real business credit approvals. So the answer is you can get a lot of money in business credit regardless of personal credit, cash flow, or credit, or cash or collateral cash flow or credit. But if you do have one of these C's, well, you could probably qualify for a business loan. To find out, just get with us. CreditSuite.com consult to schedule a consultation, or CreditSuite.com get funding to actually apply. And we have all this type of financing and even more. In the weeks to come, I'm not sure what we're going to go over next week, but in the weeks to come, we're going to dissect the bank credit score. Somebody asked for that. You have a bank credit score that you'll never see. Banks won't tell you what it is, but I will tell you that it determines what you'll get if you'll get approved for a business loan or not at a bank. And I'm going to decode that for you as well as other things. Tax law. I'm not an accountant, nor do I know a lot about tax law, so it's not my forte. It won't be happening on this scope. How often? New rounds of funding for personal guarantee credit cards. Every 6 months you can get new rounds of funding. So I'm going to go ahead and wrap this up for today. Look, guys, if you go to creditsuite.com/scope, I'm going to give you two links, two resources. .com/Periscope. You can get a free guide that maps out how to build business credit. CreditSuite.com/Periscope. If you go to CreditSuite.com/scope, not Periscope, just scope, you can get all. Periscope only leaves them up for 24 hours and then you're done. But we actually record them and then put them on our website, and they're available indefinitely on our website. So all you have to do is just go to our website, creditsuite.com, and then once you're there, go to creditsuite.com/scope, and you can access our previous Periscopes, learn how to build business credit, learn about all the C's that we didn't talk about today, learn a bunch of other ways to get loans, and we're going to be talking about more things in the weeks to come. Shelf corporations, trade lines, CPNs, which are not legitimate, but I'll teach you more. We're going to be talking about bank credit scores. We'll probably even be breaking down business credit scoring, amongst many other things. Everything to do with getting you money, credit, and financing, we're going to be going on these scopes. Thanks everybody for the loves. Thanks for the shares. We'll be back here next Wednesday at 4 o'clock to talk more about, I'm not sure what, but it might be bank credit scores. We're going to decode this. Tons of more value to come. Again, thank you so much for the loves. It means a lot. Thank you for the shares. I hope everybody has a great week. Remember, if you didn't see Christine's webinar on how she got $158,000 in business credit, regardless of credit, cash flow, or collateral, then all you have to do is email us, info@creditsuite.com. And we'll email you on playback, and you can check out the webinar. It was pretty awesome. Okay, or go to YouTube and search in business credit. It's the top result there after the two ads at top. Thanks, everybody. Look forward to seeing you next week here live on Periscope at 4 o'clock Eastern. Thanks, everybody.